So on this video I want to run through what is a binary option. If you've never heard of binary options before, I want to give you the basics and sort of give you a basic understanding of how binary options work. Now the name hopefully suggests a little bit of what binary options are about. There's only two possible outcomes, hence the word binary. You either predict a price is going to be higher or a price is going to be lower. Most times the assets will be the foreign exchange. So at the moment we're looking at the euro versus the Japanese yen, and you see a graph on a broker. This is a broker screen, the broker that I've chosen to trade with, and we can see now we've got 1 minute 42 seconds left to place our trade. If we think the price is going to go up from this point when it expires at 2015, it's currently 2008, so in 7 minutes time, is this price going to be higher than 139.678? If we think it is, we click call. We then get to apply our trade and approve that trade if we think it's going to be higher. If we think the price is going to be lower, we click put and we apply the trade there. Now if we get the trade right, when this expires at 2015, if we get the trade right, we will get a payout on this particular trade, this particular currency, of 80%. So if we're trading £15, let's have a look at this. So if we're trading £15, we would get a payout of 27. That's 80% return on our investment. 80% return potentially in as little as 7 or 8 minutes. Now that's one of the key advantages of binary trading, binary option trading. You know what the outcome is before you place the trade, in terms of there's only two possible outcomes. If you were to invest in stocks, the price might go up a little bit, then the price can come down a little bit, the price can go up again, and you can end up being in a stock for ages, and you need to put in big sums of money as well in the stocks. In forex, you have high leverage. The price can move rapidly in forex trading. So if you're trading forex, or you are used to trading forex, you know that you can actually lose more than you invest in a forex. Whereas with binary options, if we get the trade right, we win 80%. If we get the trade wrong, we just lose our investment. But you can have very small investments, and you're only in the market for a few minutes at a time, so your exposure is very small. So that's essentially how binary options work. One person did ask me the question, how can they afford to pay out 80%? Because the price might be up just one pip, one little tick. So if we said the price could be higher than 139.666, and at the expiry time of 2015 it was 167, and we said it was going to go up, then we would win an 80% gain, even though on a single tick markup. How does that happen? Well, essentially when you place a trade with a broker, if you're placing a trade that you think the price is going to go up, they're going to match that with a price, someone else that's saying that they think the price is going to go down. You can see here, the trader choice, 53% of people think it's going to go up, 47% of people think it's going to go down. So what you're in effect winning is the investment from the people taking the opposing view of you on which way that currency is going to go. So that's how it works out, and the broker themselves, they take a bit of the difference there, so they don't pay out 100%, they pay out 80% because they're pocketing the difference. That's their commission. There's actually no commission when you're placing the trade. It's just the difference between the opposing trades. Hopefully that's not too confusing, but I just wanted to explain how that works for people who might be thinking along those lines. Well, in stocks, if your price goes up by 1%, you make 1% on your trade. If the price goes up 1% here, you make 80% on your trade. And so you can get that extra leverage with binary options. So let me run through the key benefits of binary options now, and that's hopefully given you a really good feel for how binary options operate. Well, the first key benefit is that your risk is limited. When you place a trade, you know exactly what your upside potential is and what the downside potential is. You know exactly what the risk is. With stocks, you could be sat there for 6 months, 12 months and still not know what the potential upside is or downside, and you've got to be constantly making decisions. With the binary options, you place the trade, you no longer need to watch it because it's either going to win or lose, and it's as simple as that. You're also only in the market for a very short period of time. So if we took this example here, if you had placed the trade at 2010, the expiry is at 2015. So you only actually got money in the market for 5 minutes on this particular trade. So very often your money can be in there for 5 minutes, maybe 10 minutes. So again, even with markets fluctuating and some big news comes out, you're not exposed as you would be with stocks or foreign exchange trading. You can trade with very small investments. So again, you can practice with as little as £15, $25 very often, depends which broker you use, but very small sums of money to get a real proper feel playing with real money. And I think that's very important as well. You can paper trade in stocks and forex and things like that, but you know, paper trade is not the same as actually trading with real money. You may make different decisions when you're trading with real money. So you can start with very small sums, and your risk, the amount of money you're risking, can be very small. In fact, good money management says that don't risk more than 5% of your total trading capital on any one particular trade. So your maximum risk is 5%. Whereas if you trade in stocks or you trade in forex, very often you're having to trade at least 10%, maybe 15% of your capital to make it worthwhile. So you're risking far more of your money when you trade stocks and foreign exchange. What else have we got? It's very simple to understand, and that again is very powerful with binary options. You either win or you lose. Is the price going to go up from the current price, or is it going to go down from the current price? You don't need to be a rocket scientist to work out kind of how that functions. So it makes it far more widely accessible for people than it otherwise would be. The trading's 24 hours a day, so again that's better than stocks because, you know, different parts of the world you can trade. You could be up at 3 o'clock in the morning if you wanted to be trading in binary options, whereas the stock markets could well be closed. And of course, if you're trading in the currency pairs, then this is a 24-hour a day, 5 days a week trading opportunity, and it's global as well. So it's got a lot of attributes to binary option trading, which makes it very attractive. In particular, what I found with this, I used to do a lot of stock trading, still do a lot of stock trading, but what I found with binary options, when I first looked at them, I couldn't get my head around why you could get 80% return within 5 minutes. But that's the sort of returns you can get, albeit you would use a smaller stake, but you can get very positive returns in very short time periods. And if you're using a signal service like John Anthony, then it becomes incredibly simple because you just wait for the bell to ring and then you go and place your trade. And then you move out of the market and you don't have to worry about it anymore. So hopefully that's given you a good understanding of binary options, just as a sort of basic, quick beginner's guide. But that's pretty much all you need really to understand how it works. And so thanks for watching.